Thanks for joining us on another weekly episode of Succinct Financial Markets, published every Sunday. Let's go straight to the briefing as there's quite a bit to cover. Global market sentiment improved from a week ago, and risk assets rallied. Nasdaq stocks gained more than 4% last week, the S&P 500 index added 2.5%, Europe's Stoxx 600 ended 0.7% higher, and almost every other stock index traded firmer. On a year-to-date basis, technology stocks are already 11% higher on average compared to a 33% loss for the Nasdaq Composite last year. The S&P 500 recovered 6% so far in January, compared to a 19% decline last year. The main driver for the positive sentiment was encouraging economic data in the US. The GDP figure for the last quarter of 2022 shows that the economy expanded by 2.9% annualized. Although it is slower than the previous quarter, the update was better than estimates, and confirms that activity levels remain at healthy levels. Another good indicator was the core PCE prices index, the preferred inflation measure by the Fed. Core PCE grew by 0.3% in December, and ended last year 4.4% higher, in line with expectations but showing a clear downward trend from the peak last February. Also supporting the positive returns was a large number of corporate earnings reports. Although results came in mixed, companies such as Microsoft, Tesla, General Electric, AT&T, Johnson & Johnson, Visa and MasterCard all beat estimates. But there were also some big disappointments, namely Intel, Boeing and 3M. Regarding Microsoft, despite beating earnings, with a net profit of $16 billion for the quarter, it offered a weak outlook for Q1 of 2023. The stock fell sharply initially, but later recovered to end the week 3% higher at $248. The other notable update was Tesla's strong results and the stock reaction. The company made $3.7 billion on revenues of $24 billion in Q4. Elon Musk said the production target for this year was a record 2 million vehicles. The stock jumped 33% on the week to $178. This follows a 65% decline last year. It is worth mentioning that Tesla is the second most shorted stock, after Apple, so many short sellers rushed to cover their positions. In Europe, the continent's largest company, French luxury giant LVMH, reported record revenues for a second year. It made €14 billion, 17% more than a year ago on sales that reached €79 billion, up 23% year-on-year, on the back of strong Chinese demand after COVID restrictions were lifted. LVMH increased its dividend and now pays a 1.5% dividend yield. It is trading at an all-time high, for a total market value of €404 billion. Moving on to currencies and rates. A very quiet week on this front with limited change, as the dollar index ended flat. Benchmark government bond yields shifted marginally higher, with 10-year treasuries at 3.5%, and bonds at 2.25%. In commodity markets, crude oil ended modestly weaker, with Brent closing 1.5% lower at 86.7 and WTI at 79.7. The big movers in the asset class were European gas prices, which lost more than 17% on the week, to €55 per megawatt-hour, as gas storages are still at high capacity levels, and Europe is switching to LNG imports. Coffee was another big mover. Arabica futures recovered 10% to $1.7 per pound for the March contract. The catalyst was last week's report in Brazil that shows exports fell to the lowest in 4 years. Coffee was the weakest contract among the soft complex last year, with a 25% fall. All eyes are on next week's central bank meetings. The Federal Reserve, European Central Bank and Bank of England announced monetary decisions on Wednesday and Thursday. Futures are pricing in a 97% probability of a 25 basis point hike by the Fed to 4.58% mid-rate. Thanks for listening, and please keep sharing this channel. Hit the notification bell to make sure you don't miss any of our Sunday episodes. Also, visit us at succinct.info to learn about our service. Feel free to email your feedback to podcast@succinct.info. See you next week.